Global markets are on edge as the US hurtles towards a critical debt ceiling deadline, sparking fears of a financial contagion. Soaring treasury yields, volatile stock indices, and a surge in gold prices signaled rising investor anxiety. With emerging markets already feeling the tremors, the world braces for impact as America's debt dilemma only deepens. More in this next report.
Global financial markets are under growing pressure as the United States' public debt balloons to unprecedented levels, surpassing $36 trillion. The sharp rise in borrowing and interest obligations has triggered widespread concerns about the stability of US fiscal policy and its ripple effects on international markets. Investors are closely monitoring the situation, fearing that the world's largest economy could trigger a contagion effect across both developed and emerging markets. In the US, government bond yields have been climbing steadily, signaling investor anxiety over fiscal sustainability. Equity markets, once buoyed by strong corporate earnings and optimism around artificial intelligence, are starting to show cracks. Volatility has increased across key indices such as the S&P 500 and Nasdaq, with capital rotating away from riskier assets into safer havens. Gold has emerged once again as the classic safe haven asset. Prices have been climbing steadily as investors seek shelter from the storm. The metal's performance is also being supported by expectations that central banks, particularly outside the US, may slow down or pause rate hikes in response to tightening financial conditions. With the dollar's volatility adding another layer of uncertainty, gold's relative stability has become attractive to institutional and retail investors alike. The US debt trajectory is also fueling debates around potential downgrades to its credit rating, a move that could further rattle markets and raise borrowing costs globally. The risk of contagion is especially high for emerging economies that rely on US dollar-denominated debt. As capital flows out of these regions toward perceived safer assets, currency depreciation and inflationary pressures are likely to intensify. In this fragile environment, any shock, whether political, economic, or geopolitical, could amplify existing vulnerabilities. With investor sentiment on edge, global markets are bracing for a turbulent period as they navigate the storm stirred by America's soaring debt. Bureau Report, WION, World is One.